much, and welcome everybody to today's webinar on reporting your credit data, METRO2, e-OSCAR, and the new tougher FCRACFPB compliance in regards to all of the above. As you all know, over the course of the last few years, times have changed, and tougher regulations and consumers' needs have come to the forefront. Regulators and examiners are wanting to ensure that the consumers are protected in every aspect when it comes to financial lending across the board. And this also includes the credit data that is being reported on them. So let's take a look at today's agenda. So today's agenda, excuse me, we're going to be looking at a couple different areas. First of all, we're going to talk a little bit about the METRO2 credit reporting guidelines. Now, these guidelines have been established under the furnisher's initial reporting obligations. We're going to talk about the FCRA, the related litigation. We're also going to take a look at how you should be reporting your accounts that are included in bankruptcy, and that includes how they should be getting reported under Chapter 7 as well as Chapter 13, and also the additional requirements of what you need to be doing if a consumer disputes an account. All of the obligations that you have to ensure that not only, one, you're being compliant with your requirements, but also that you are showing that you have the consumer's best interest at heart in protecting the data that is being reported on them. We're also going to take a look at e-OSCAR, the FCRA litigation risk and compliance burden. We're going to take a look at the recent developments that have occurred as a result of the FCRACFPB compliance requirements. We'll also explore how you should be responding. What if a consumer does have a dispute? How should you handle it? How should you properly handle it and follow through? In addition, we're going to look at how the scope and the review of a consumer dispute, and what your obligations are as far as deleting trade lines or other obligations off a credit report as part of the whole reporting process. And then we are going to have a discussion on how to handle consumer complaints of identity theft. Identity theft continues to grow despite all the proactive approaches and different ways that we're trying to mitigate the identity theft risk, like with a lot of other financial crimes, as financial institutions and law enforcement and regulatory agents try to come up with ways to prevent identity theft. Identity thieves always seem to be one step ahead. So we're going to look at how you should be handling claims of identity theft, taking it seriously, and helping the consumer protect their credit rating. So just a little brief introduction before we start getting into the detail of the webinar itself. Let's touch on a few things. Now, as part of the overall reporting process and dispute and so forth, what is being used is called the Automated Consumer Dispute Verification System, commonly referred to as the e-ACDV. This is an electronic notification system that is received by the defendant through a system. And this is commonly known as e-OSCAR. E-OSCAR is basically your online solution for complete and accurate reporting. All financial institutions are required to be using this. The credit bureaus respond back and forth with this. This is an automated system that was put into place to try to put in some consistency and have everyone on the same page when it comes to reporting credit data on consumers. Now, the e-ACDV is a form that credit reporting agencies use to verify creditor information. And how this works is the consumer will initiate the response. The consumer will reach out to the credit reporting agency and question information, whether it's a late payment, inaccurate information, so forth. And what happens is that the credit reporting agency uses this electronic form, the e-ACDV, fills it out, and we'll talk about the different codes and that and so forth in just a moment. And what they do is they electronically send this to the creditor, so the creditor has an opportunity to investigate and respond in the time period specified. And we will talk about this specific time frames in a moment. Again, this is designed to ensure that everybody was using the same process. Everybody now is tied to the same timeline requirements, providing the accurate information, and so forth. And failing to do any of this can result in penalties for your institution. Now, what it was trying to eliminate were the days of a consumer contacting a credit a credit reporting agency, TransUnion, Equifax, and so forth, and then having a very lengthy time for them to respond, or you had to mail things in, which still could be the case, but this is supposed to ease up the process, because one of the common complaints by consumers is if there was a derogatory item on their credit report that may not be inaccurate, this derogatory item could be preventing them from getting a mortgage, an automobile loan, student loans, and so forth. And the time it was taking for it to be addressed oftentimes results in a consumer losing an opportunity for funding and so forth. So back to the CRA, the credit reporting agency. So now what happens is once that time period goes by, the credit reporting agency now is obligated to take action on the consumer's item. Now, pardon me. So now then what the credit reporting agency does is now address the consumer's credit report. Some cases that might result in deleting a time frame, correcting information, and so forth. Now, what happens with the credit report agency? One or two things can occur. If the creditor fails to respond and to follow up on it, the credit report agency has an obligation then to correct the credit report based on the information the consumer provided them. That's number one. Number two, if the creditor does get back pertinent information to the credit reporting agency regarding this disputed item and so forth, they will update it in accordance. Sometimes things change, sometimes don't. It just depends on the nature of the dispute. So what is the e-Oscar system? People hear the term. So let me give you a little bit of general background of what the e-Oscar system is. As I had already mentioned, it's a credit reporting, electronic credit reporting tool. It helps report disputes, and they're all handled now through e-Oscar. Now, however, recent updates have affected credit furnishers, or legal obligations in regards to these disputes, and we're going to talk to you about that in a moment. And also, because of this system now, there's also additional problems that have arisen from the METRO2 credit reporting guidelines, especially for bankruptcies, disputed accounts, and identity theft. It's getting the codes. With the electronic system, everything is reported via codes. So what a challenge is for a financial institution then is selecting the appropriate code that best defines the current situation. And we're going to go through the codes here in just a moment. So the e-Oscar is a web-based. It's METRO2 compliant. It's an automated system, as we've all mentioned, and all the credit reporting agencies use it. Now, when we say credit reporting agencies, it's important to realize that just not the standard three, Equifax, Experian, TransUnion. This also includes any of their affiliates or any independent credit bureaus or mortgage reporting companies. Typically, they have credit scoring items too. So any type of credit reporting agency, as defined, is obligated to be part of this e-Oscar system. Now, the system supports, as we mentioned, the e-ACDV, and it's also part of the Automated Universal Data Form AUD processing. And this is a universal processing system that is used through the credit reporting agencies. Now, as we've already talked about, the e-ACDVs are initiated by the credit reporting agencies on behalf of the consumer, who then sends it to the creditor. Now, the e-ACDV is returned to the credit reporting agency who initiated with updated information, if there's any, related to the credit history of the consumer. Now, if the account needs to be modified, deleted, and so forth, copies are sent to each consumer credit reporting agency and to whom the creditor is reporting to. So, for example, if a consumer contacts TransUnion with a complaint, the TransUnion will initiate the e-ACDV back to the creditor. Now, if the creditor needs to make any modifications, and that creditor reports to all three credit bureaus, Equifax, Experian, TransUnion, not only will TransUnion receive a modification to make to the consumers, but they are obligated then to report to all the consumer all the credit reporting agencies that they report to that modification. So it doesn't just get modified from the one that, from the credit reporting agency that they receive it from. They need to notify any and all credit reporting agencies that they report to. So